So starting off with macro markets, someone had asked me on Twitter, a few days ago, like, is my estimate still like 60 or 70% that we have like a soft landing of the markets? What I interpreted as Powell's comments, meaning he's going to follow the data. In the last Fed meeting, when he gave his speech, that was like the big point. Like they're not committed to what they're doing the next Fed meeting. They're going to follow the data. So if the CPI print for August comes out in a week and it's like 0.1% or zero or even negative, you would think that the Fed should follow the data and be like, hey, look, inflation's really under control. We don't need to raise 75 basis points. We can raise 25 basis points. But it doesn't seem like Powell is looking at that data.
It's kind of interesting the way they keep changing their tune, but certainly was not a good sign, I think for equities and for the prospects of continued rate hikes going forward.
I think maybe them being extra aggressive in raising rates could help the Fed being perceived by the general public that they saved the world from great inflation or something.
I do agree with you though. Like I think a lot of the things that are outside the Fed's control, and it's not like raising rates clears up the port of LA or gets, ships out of Shanghai.
Frustrating that the Fed is in control of our portfolio performance so much. All the stocks are going down because of the Fed, or all the stocks are going up because of the Fed. It's not the type of investing that we like.
We've spoken about the split before, and it really shouldn't have any impact on, in the long term. To me, it seems like Tesla's been a relatively strong performer in an overall very weak market.
I was worried that like people were buying into the split thinking it's going to like go through the roof like the last time. And then the stock, everyone would sell at the same time afterwards and it would go down 20% or 10 or 20% in a day.
Yeah.
I was a little bit worried about that possibility. I also saw in the chat, someone was talking about how Bradford Ferguson is breaking, the energy credits, the more complicated energy credits Tesla is receiving, and he's been doing the rounds. It seems like it's going to be a bigger impact, right? More billions of dollars to Tesla's bottom line, but at the same time, I feel like it's less important to Tesla than it was in the past.
Yeah, I think that's a fair assessment. Kind of buried in this Inflation Reduction Act, legislation that was passed recently. There was, I think it was $35 per kilowatt hour for battery cells made in the U.S. and $10 for battery packs, so like assembling them into modules. That was something that I think most people were not expecting. While Tesla probably doesn't need the benefit, I do think it's a reasonable policy, all things considered, to try to jumpstart this industry.
And the other really big news that we have to get to with Tesla is the 10.69 release. From the videos I'm watching, it looks really impressive. And Elon still reaffirmed that he hopes to get it to wide release, globally, or at least wide release in the US by the end of the year. Kudos to that Tesla self-driving team. The whistleblower report for Twitter, right? Then you have this new letter filed by Elon to reconfirm that they want to exit the Twitter deal. My thought on that is that Elon is trying to use everything he can to get a better price. He's trying to put the pressure on Parag and the board to like settle for a lower price.
I had been thinking, maybe a month ago that there was like a 75% chance that the deal goes through just at some modestly lower price. But I don't know. In reading through everything recently, I think the issues at Twitter are probably more significant than anyone really realized. And so I could see Elon just saying like, listen, I don't have time for that.
I can't see Twitter not wanting to settle at a lower price, given that their stock is going to be more than cut in half if it falls through.
There's probably more potential for revenue generation from grid services. I thought the revenue potential from a VPP overall was about $400 per year, and that you'd split that some amount between Tesla and from the asset owners. But right now, what we've seen is that Tesla's actually giving the majority of that benefit to the owners and not really taking a slice.
The spread could be like 20% of the value of the option itself. It's kind of crazy. Typically, if you wait a few weeks, the spreads start tightening, and that's a better time. You get a better value for your buck, assuming Tesla doesn't like run up in those few weeks, obviously.